Wow, great room. Welcome, everyone. Thanks for coming out. Good morning. Okay, we're going to watch a short video. Integrated Equities is an exempt market dealer. We help investors put private equity real estate into their portfolios. Our goal is to find you deals. We do due diligence on companies, we research markets, and we analyze investments. Our goal is to help you build generational wealth through real estate.
There are a few key characteristics to private equity that make these opportunities attractive. Many of our clients are busy working professionals, and private equity provides a passive, hands-off approach to investing in real estate. You are not required to get mortgage financing, and there's a low investment minimum of $25,000. You're also able to utilize your registered accounts and invest using your RSP and TFSAs.
Investing in private equity real estate can provide your portfolio diversification with projects throughout Canada and the United States. We work with experienced management teams, each with specific investment strategies and strong track records. These companies offer investments from multifamily, land development, self-storage, mortgage funds, and apartment buildings. We look forward to connecting with you and helping you achieve your real estate investing goals.
So, how many people work with real estate investors in the room? How many people are finding out that a lot of the changes in real estate ownership are prohibitive to investors? We're going to get a new rule with tenanted properties, and there's a lot of things and there's a lot of reasons why investors are looking elsewhere. It's a little bit about me. I've been doing this for a very long time. Randy and I can both attest to that. They mentioned I was licensed. I've done about 500 million in transactions since starting in the private equity world. I work specifically on real estate private equity, so I'm bringing capital to partners that are active in the development world. So Integrated Equities acts, we have a team. We are continuously looking for investment opportunities, and we're looking to groups that actually are bringing good product and have done it multiple times. So we don't work with startups. So here's how it works. We do all the due diligence. We do all the reporting and the auditing of these issuers for every development as it goes through, so you can track performance. We work as an agency relationship. So we work with the clients as well. We try to make sure, is this a suitable investment for you? So we take a picture of that client, a financial snapshot. We get to know who they are, what their objectives are, what their risk tolerance is, and what their time horizon is. We really want to make sure that when we make a recommendation, it's going to work for you. And I'm going to cover off some of the key things that you have to think about before you would consider this type of investment. So what is it? Private equity is really a way for you to participate in investments, real estate development, commercial, industrial, without having to know or have any experience in that world. You can participate from the ground floor up. So we really look at it as a financial asset. So it's no different than a GIC, bonds, stocks, mutual funds. All of these things comprise your financial assets. And we do recommend that you do consider private equity, but really for a portion of your investments. So we work to help you add real estate to your financial portfolio. And really why I'm talking to this group today is, as realtors, you're working with real estate investors. It's a great way to monetize your channel. You already know these people. You already know that they like real estate. We have developed an online automated platform for you to be able to introduce your clients to this product and earn referral fees. So how many clients have TFSAs, RSPs? There's no simple, easy way to invest in real estate using registered accounts. This is a way that they can do it, and for most of those investor clients, they love it. So the real estate, as I mentioned, I'm focused exclusively on real estate. No other types of startups, no tech, no crypto, just real estate. Multifamily, commercial, industrial, we have self-storage. We work with large real estate investment trusts, mutual fund trusts, and mortgage investment corporations. Here's just a sampling of who we work with. 6 out of the 8 companies are real estate developers. So we're very focused on what we consider the best opportunity today. The returns range anywhere from 7 to 20%, and this is related to risk. Real estate development is not a risk-free business, but what we try to do as a company is really reduce that risk by going through thorough due diligence and also keeping the reporting and the transparency and the auditing continuous. These are the most common financial structures. Limited partnership. Today, I have a booth out there, and this is a limited partnership structure. So it's a GP, LP. As a limited partner, you are a passive investor. You're giving capital to the developer to develop that property. The real estate investment trusts are really about companies that buy pools of residential buildings, and they flow the income through to their investors. Many of these qualify for registered accounts. Mortgage Investment Corporation basically is lending money as a private banker to companies, but it's formalized, it's audited, it's set up to underwrite good mortgages. So the key characteristics to the type of product, it's not like what you're doing every day where you're going and finding a condo and the client is going out and getting a mortgage and they're putting that client into it. So ours is very passive and hands-off. There is no mortgage required. A lot of them are structured for tax advantage, which means they're returning capital and they can defer the taxation until the end of the investment. We have a very low minimum, 25,000 Canadian, and it is eligible for registered accounts. But really, the main reason clients look at these is it gives them access to deals they otherwise would not be participating in. When you talk to clients, they ask questions. How do I know? How does it work? Well, these are some of the key considerations that people look at. When do I make money? And what order do I rank before I get my money back? That's really important. It's covered off in all the documents. The fees. How much are we paying for this company and these people to do the work they need to do? And is there income? What's the frequency? What is the reporting frequency? Do I get annual reports? Do I get monthly reports? How do I know how it's going? And then the taxation. As I always tell everyone, it's not what you make, it's what you keep. And it's getting more and harder to keep it. So this is a typical, what we call, it's the repayment of your principal and your investment. It's called a repayment. It's called a waterfall. So every debt and every obligation is paid out first. Then as an investor, you would get your equity. Plus, if there's a preferred return, a lot of the new developers are offering a preferred return. And then after that, your profit is paid to you and then to the developer. So that's the way it should work. You get paid first. The developers are getting paid their fees going in. You should be getting your money and your equity out first before the developer participates in any of the profit. This is extremely important, and one of the reasons when I got into the industry, I started working with companies and saying to them, you know what's really missing? No one is doing a good job in keeping the clients in touch with their investments. The reason private equity is not mainstream and still pretty relatively unknown is that no one is actually educating people on what they should expect. Many of the companies take your money and you may never hear from them until all of a sudden it's not there anymore or it's being paid out. So we really work with our companies to say you need to provide clients with constant, continuous reporting and audited financial statements at the very minimum. So that is what you can expect investing in any of the products we have. So risks, that's the biggest concern here. It's illiquid. You're giving your money to a company so they can deploy the capital to make you money. It's no different than when you build a home to sell. You're putting your money in the ground. You can't pull any of that money out until the property's sold. So you have to keep in mind, what is your investment time frame? How long can you hold this investment before you need the money? You have no control over it. You're giving your money to people that are industry experts to execute on their promises. And, there is a longer investment time frame usually with these. Some of them are very short. We're actually working with a lot of developers now to shorten and tighten up that timeline. How many of us are aware of the unaffordability? I think just about everybody is. And I think just about every government body is familiar with the problem. That is the reason they're putting all these policies forward to tell people what they're doing to encourage housing. They're buying votes as far as I'm concerned right now. I don't know how practical the solutions that are being put on the table are. And certainly when I see some of the statistics that continue to come out, they're not really achieving it. We're bringing more people into the country. We're unable to fulfill the need for housing, and they're doing everything they can to throw everything at the book to make it happen. So I love this chart. It's an old chart, but it really tells me that rental rates will continue to rise. The home price and income ratio has increased by 50, like the price of homes has increased 51% to the income for Canadians right now. They can't afford to buy a home. And I'm sure you guys are all well aware of it, that how hard it is for someone to actually not only just find something they want, but to buy something they want. Here's what's happening in the market, according to CMHC, who tracks the vacancy rates. We've seen the lowest vacancy rates we've seen in 20 years. And that trend continues to go down. When I started in the business in 1990, vacancy rates that we put in pro formas were 7%. That was the vacancy rate that was being posted by CMHC. Now that either tells you how old I am or I lived in a different country. We're not seeing that anymore. These are rates that are and we don't see that trend changing. So what we've tried to do is really go after where's the government supporting policy. I don't want to fight government policy. I want to go with it. I want to find investments that are going to benefit from government policy. And this is really why, as a case study to show you how that works. But before I get going, please know none of our investments are guaranteed. There are documents, there are pro formas, everything's stated, and the key assumptions are based on today's known information. So, you know, past performance is no guarantee of future. You have to understand the risks and be willing to do your own homework on them to feel that they're good assumptions. We do a lot of homework on our investors. We do independent verification of all their information using quantity surveyors, legal, accountants, property managers. We look at all the reports that are provided and we do our own reports. It costs us about $15,000 to $20,000 to onboard a new company to be able to represent through the due diligence. So that's your eyes and ears, for lack of a better explanation. And if you had to do that kind of deep dive, would you make that $50,000 investment? Probably not. You're not going to spend 20 to put 50 in. So we really like the investment that I brought to this group. It's de-risked. Development permits in place. They have a secured commercial tenant with a 10-year triple net lease for the ground floor. It is a 70-unit residential apartment building. It's a 5-story wood frame. 7 of those will be affordable, which is how you get approval in most of the municipalities now. You give some affordable rents. And 63 will be market rent. This is an investment in a builder building a property, developing it out, and renting it, and then selling it to a real estate investment trust. It's a very short timeline for real estate development. It's forecast to be 30 months, and I think that's actually quite conservative. It'll take about 24 months to build. All of the new properties in North Vancouver are renting up within 2 months max. Last building that was brought in new rented up in 2 months. They're giving it 6 months. So we believe that this developer has really addressed and used conservative assumptions to bring this investment forward. So it's located on 3rd Street in North Vancouver. It's in the heart of North Vancouver. Permits, development permits done. No waiting for municipality to approve anything. Going to start excavation next month. We've got a 30-month time horizon, and we've really got other things that I think make it really different. There's fixed price contracting. What does that mean? Cost overruns are borne by the developer. That's their risk. This developer is putting in 50% of the equity. So there's a lot of pluses on this deal that we really like, and mostly location. Rental requires access to transit. This has access to transit. It has access to mountain, walking, biking, ocean. It has access to all the amenities, restaurants. It's really a transitional area. So let's look at the demographics, because this is really what drives the market. North Vancouver has really high rents for new build. And the reason being is that 80% of their properties have been built in the 1970s and 80s. These are old, tired rental buildings. And that's their choice. So any new builds that come on, people are lined up, just like pre-sales used to be around the block. You'll see long lineups. And, I drove by one on the corner of 15th and Lonsdale, and I thought, oh, this is a pre-sale. I haven't seen this one. And no, it was an open house for rental. So this market is really underserviced. So I think that's the timing that you're looking for in an investment. Very young population, and population growth is around 3% per year, which is considered very solid. It's actually considered robust. And again, looking at that vacancy rate, you can certainly tell why the demand's there. There's nothing. So just to recap, milestones are start in August. They've already closed on the land. They're going to start their excavation in August. Building permit will come out in August. Occupancy by June of 2026. And then 6 months to rent. And then they're stabilizing. You should receive your equity plus your profit share early 2027. I know that I spoke to the developer, the principal, and he told me that he's meeting with Marcus and Millichap, but they have 3 institutions already saying, please put us on your list to buy this. So here's just a recap of the investments. We always like a fallback position. So you can see 5-year exit, 10-year exit. And, if we get to the end of this and you can't sell it, you haven't lost all your money. They're going to take out financing with CMHC program, and they're going to be able to hold it. And you as an investor will receive your pro rata share of the income until they sell the property. But their idea is that they'll sell on completion and stabilization, and the total return will be about 48%. If you want to annualize that, it's around 20%. Details are out there. You can scan this QR code. It takes you right to the site. There's a full webinar with all the details about this product, and any questions you have, certainly feel free to reach out and ask me. So why I'm really here today is to tell you that I work with a number of referral partners. I think EXP is a perfect network for that. You guys all understand the power of referral. Do what you do best and make introductions to monetize your channel. And we have developed an online platform that allows you to make introductions to our product, that tracks everything, notifies you, all your clients that are in it, and pays you immediately on closing of every one of our deals. We're offering up to 25% of our fees to any referral for their introduction. I do a lot of marketing. I know how much it costs to bring in a new client. And the other thing is, I understand you're all out there looking for people to invest in the product you have. I don't want to take that money away or those resources away from you, but your clients have registered accounts. And I know in speaking to a lot of clients, some of them have never heard of this opportunity. So it is a way to introduce your clients to it through a registered account format. And I have a webinar that I do that introduction to the clients, so it helps you out. Happy to answer any questions. Booth is back there. And thank you.